In this video, we're going to discuss credit and how you get it and how you determine what your credit is like or assess your credit situation. So in this case, what we're going to concentrate on is your credit score and credit bureaus. So credit, again, is the funds provided by a creditor, right, that have to be repaid. I'm sure we all know this. In the future with some interest. That's credit. So there are different types of credit. Non-installment credit is like department store credit, right? Installment credit is credit from making specific purchases with interest charged on the borrowed amount. Now, non-installment credit is really more a function of the past, if you will. This does not refer to credit cards at a department store. So this would be, and this is how I remember it when I was a kid. When I would go up to get a new pair of shoes, I'd go to the shoe store. My dad had an account there, so I'd go in, I'd get my shoes, I'd walk out with brand new shoes, and then about 15, 20 days later, they'd send my dad a bill. That's non-installment credit. There was no interest charged, right? It was just with that particular store. And as a general rule, I think this is probably a little outdated as a real source of getting funds. Installment credit is more the type of process that we currently see, right? Where it's, there's some form of interest charged on the amount that you borrowed. This could be a specific loan. It could maybe be a credit card. Now, revolving open-end credit, it's really usually set up with some type of a financial institution like a bank or a credit union. And basically, you can get up to a maximum amount of funding. Again, obviously based on your financial situation. Interest is charged each month on the balance that's left on this revolving open-end credit. So it's, again, very similar to a credit card or a loan, except this kind of happens over time. You can increase or decrease the amount of debt that you owe simply by either taking more out or whatever. You don't have to have another arrangement, another contract that specifies what the money is for and the rules. So the advantages of using credit, obviously, is you want to help to build a good credit score, and we want to be able to eliminate that as much as we can the need to carry cash writing checks. Of course, the disadvantages, we can have some excessive spending, right? Buying more things that you want than things that you need. And again, if there's a large accumulation of debt, this could ultimately create some issues with paying on the amount that we owe. The primary two credit acts that we need to worry about, the first one is the Equal Credit Opportunity Act. This helps protect debtors from unethical creditors. Again, there's a variety of rules. This has to do with credit collection. It has to do with the actual offering of credit. So there's a variety of rules in here that are there to help protect the consumer, protect the borrower. The Financial Reform Act of 2010 created a specific bureau, right? It's a Consumer Financial Protection Bureau, and this sets out some more general guidelines, if you will, for more modern types of financing and the way technology has grown. So this regulates online checking accounts, credit cards, student loans, right? The idea here is to ensure that people have good information and prevent some deceptive practices by some entities. And it also helps to regulate, to a certain extent, the credit rating bureaus. So what is it that we are interested in, right? As a consumer, right, you have a credit history. If you've never borrowed any money, you still have a credit history. It just shows 0. So again, once you start making some form of payments, typically it starts with utility bills. Once you've started making payments to some entity, your credit history begins. And as long as you're paying your bills in a timely manner, that credit history certainly won't go down. It may go up, but it certainly won't go down. Credit insurance can help cover payments under some adverse conditions. So there is actually an insurance that you can purchase that if things get really bad for you, maybe you lose your job, right? Whatever, something bad happens, that this insurance can help cover some payments under some more unpleasant kinds of situations. So we're going to switch gears now and let's start talking about this credit score and where we can find that. A credit bureau gets information from those people that we borrow money from. So your bank sends information, credit card companies, department stores, the utility company, all of these entities that we have financial transactions with report or send information to credit bureaus. These credit bureaus create a report that's supposed to document your credit payment history. And there are 3 primary bureaus: Equifax, Experian, and TransUnion. And you can get these reports for free. It says here you can get them annually. If you go directly to the company, if you call Equifax or get online and go to Equifax, you can get a report annually. But there are ways that you can get reports on almost a daily basis, and we'll talk about how that could happen. So what are the credit reports, right? So you're going to get some type of distinguishing identification of you, the date, etc. There'll be some information about your name, your spouse's name, some social security number information, occupations. Then you'll get some potentially negative information from public records, right? Any bankruptcies or tax liens that you might have. Accounts are all turned over to these agencies, right? So as well as any activity between you and these agencies that you're dealing with. So all the account information, both open and closed accounts, are included. A list of companies that you've requested credit from is there. And all of this information is gathered and created and provided in a report. So your report is sort of going to look like this, right? Here's the number, here's your information, previous addresses are going to be indicated, right? Any kind of public record information, we've talked about that. Here's some collection agency information, right? This is a medical center, right? So there was a paid collection account, so you paid on that. And then down below, we'll start to see the accounts that you have. So here, Durham Savings, right? You opened this on 2/15. It was an individual account. There was 6 months review there, so there's 6 months of information. You had borrowed $48.97. You owe $29.58, and you've been paying as agreed. And then down here you see the auto finance. Again, that was taken out 3/15. Again, it's an individual account. 27 months of review are in here. You owe $2,400. I'm not sure what this. I think this $50. This is the payment. So you currently owe $300. It's $200 past due. So again, this is the piece. It says payment history 2 times. You've been 30 days late. 2 times. You've been 60 days late. So again, this is the kind of information that's on a report. your credit score, everybody talks about the FICO score, right? There's a numerical rating, right? It indicates creditworthiness. The people that you're dealing with financially rely on this score to determine whether or not to extend a loan, and it can also affect the interest rate on loans. The data is incorporated in a mathematical algorithm, right? Where about 35% of the score is your payment history, 30% utilization, 15% is your credit history, 10% is new credit, 10% is different types of credit. So again, there's a variety of characteristics, if you will, of your debt that incorporated and go into this score. Now we talked about there being 3 bureaus, but they don't all have access to the same information. So from time to time, you might see different numbers. And again, we're not talking drastically different numbers, but you'll find different numbers depending on the bureau. Essentially, the way the FICO credit scores go, they range from 350 to 850. 600 is considered to be a good score. Now, one of the challenges is, what if the information that's being reported is incorrect? The idea is you need to contact the credit bureau that has this inaccurate information, and the credit bureau is required to investigate that within 30 days and get it cleaned up if it needs to be cleaned up. So again, if there's something wrong, again, a reason why we need to look at this occasionally, you want to be in there and being a little proactive with your score. So how can you improve your score? Catch up on any late payments, obviously try to reduce debt, cut back on some unnecessary expenses so that you can make the payments on time. Here's something that's interesting. You should destroy your credit cards or any credit cards that you want to destroy, but don't close the accounts. If you remember, one of the things that we talked about earlier is the credit history that you have, right? The amount of open credit that you have is a positive thing. So if you want to keep them open, to keep your account up. And again, if you're having some trouble making payments, right, call your creditors. They maybe will make some arrangements so that ultimately they won't report as bad, as long as you're proactive with making payments. Again, we talked about you need to review your credit report a couple of times a year, looking for errors. Obviously, then trying to figure out ways to increase your numbers. There are apps out there that you can download onto your phone, onto your desktop, right? You can open an account with some of these companies, and they will also even provide you some guidance on how to improve your credit. So again, you want to look at the data that's out there, make sure it's accurate, and again, see what information how you can act to increase your credit rating. And as you can see here, right, the highest credit rating, 800, 850, only about 13% of the people are there, right? So if you're below 650, if you're in this range here, there might be times that you need money that you can't get money. Obviously, from the 650 to 699, right, you're in a better range here, right? So money might be okay to get. It might be a little expensive, but definitely if you're, in these two up here, the below 600 level, if you're up here, money is going to be, you might not have access to money. And of course, anything over 700, if you're in this range, you should have ready access to any kinds of funding that you might want to get, and you should be able to do it at a relatively lower fee or cost of financing. So You can get consumer information from the Federal Trade Commission. Gives you information on how to get a free credit report. It helps you with that. But there is a company, and not that I'm promoting this company because there are several, but Credit Karma has an app, right? It helps you access your score. It monitors your score, right? It can devise a plan to help improve it. I utilize this. It's on my cell phone, and it's free. So again, it's just an app that helps you review your credit. If something happens that your credit goes up or down, you will get a notification that tells you, hey, something happened to your credit, so you can go out and check, right? So if they send you a notification that says, hey, your credit went down 10 points, you say, well, why did it go down 10 points? I didn't do anything. Then you can go out to Credit Karma and you can see what happened to your account and why the score was adjusted. And of course, at that point, you need to decide if it was correct or not. You need to decide what to do to obviously fix the number. So that's all for this video. I hope this was helpful.